Good morning, traders. I am Stephen Davis, Senior Market Strategist, RJO Futures. It's a Friday, March 12th, and we're going to talk to you about the grain markets here in the next couple of minutes. Okay, these charts I put in front of you today, corn and soybeans, the row crops, they look in very good support. The wheat chart that you're going to see here a little later, there's not a lot underneath that market. So as we speak, soybeans are down 19, corn is down 3, and Kansas City wheat is up 1 penny. Corn is 4 cents off its lows, so maybe the lows are in for today, and we'll see how we close for the week. So corn market. So China, they're rethinking their security plan for grain markets, and you just, the transparency over there, even the ASF, the Asian swine flu, you just don't know how many hogs that China has. You don't know exactly the situation that they're in. Corn stocks, you don't know China's situation on corn stocks, and this points to capitalism versus communism, and certainly with capitalism you get a little more transparency from our USDA and things like that. Back in 1972, the Russians came in here at the Chicago Board of Trade and stole our grain markets at lower prices. And this is what the Chinese are doing. And since 1972 now, we have daily USDA announcements on export sales, and just they keep tabs and totals every day and every week. And China does not do that. So the International Grain Council and Food and Agriculture Organization are very concerned about China's grain inventory and things like that. And these agencies, they have China corn stocks much lower than our USDA, for example. So our managed funds that trade our markets, they seem to have a better hold on Chinese corn situation than the USDA does. So nonetheless, that's where we're at here today. And later in the month, March 30th, March 31st is the acreage report. That's 3 weeks away, and this is going to be a difficult report to forecast and a hazardous one to trade, so high-risk report at the end of the month. So look for the basis now to improve. The Chinese are going to buy, for example, our soybean down the pipeline supply. So basis should improve to get the farmers to sell what corn and beans they do have left. So demand is stout here, and look for it to continue. Look for China to continue to buy U.S. grains. Brazil soybeans are very cheap. This is our competition. Argentina corn is the cheapest in the world. This is our competition. So a lot of cross currents going on, certainly China demand, and we've always been taught in school that big bull markets of soybeans are led by soybean meal. Well, here we are 2021, and palm oil's in a bull market, soybean oil's in a bull market, cottonseed oil, canola, our neighbor to the north, Canada, grows a lot of. So the share of soybean oil now on the crush is 40%, which is the highest it's been since 2012. So good story here on these vegetable oils around the world. And that's what the consumer of the world wants. So we'll keep talking about all of that. Here's something that I do think is important here is July beans. When we get into soybean situation, stocks to use ratio under 4%, and we're under 2% here, you do see highs in July beans later in the spring and later in the summer. So I kind of think that's what lies ahead. We have no room for any weather traversity here this spring and summer, and when we get it, you're going to see July beans rally and make new highs. So we'll kind of talk about all of that here. The wheat market now, you can see the chart in corn in good support, the chart in soybean in good support. The next chart on wheat here, very weak, and Russia cash market is very soft in the wheat market, as it should be. Ukraine and Russia, their wheat crops are in very good shape as we speak. Let's all have an excellent weekend.